All right. So 5 questions that every entrepreneur should ask himself. First thing here is, what is your number? And so I think this is good that how exactly would you define financial freedom? And I think making sure you know what that number is very important, because I think that you can look at life through a different lens of abundance once you have that number. And maybe you want to intentionally pivot your business one way or another. Once you've hit that number, you'll make different decisions. So I think that's very important. The second thing is, what percentage of your net
Can I say one thing on that,
Yeah.
on that question? When I did my MBA, and I did my MBA in 1995, so, a few years ago. And one of my classmates was a guy who worked for Intel, and he called me up at our 10-year anniversary from our MBA, and he said, hey, let's have lunch. I went out to lunch with him. I said, how's it going? He goes, I love what I'm doing. I go, you love what you're doing at Intel? He goes, yeah. I go, that's interesting. Why do you love it so much? And he said, well, because I don't have to work there if I don't want to. And I said, why is that? Well, if you remember, Intel stock went on a tear in the 80s and 90s. It was like crushing. And in those days, you could have all your money in a 401k within the company stock. So he, like everyone else, or a lot of people, had all of his 401k was Intel stock. And he said it was the year 2000. And all these guys were talking about how much their 401ks were. And he said he looked at his one day and he did the math and he goes, wow, that's enough. I could retire today with that much. So he said he didn't think anything about it. He wasn't following the stock. He just said, I'm just going to sell because now I have enough. So he sold his Intel stock, and then Intel crashed 2000 to 2002 and all these things. So then he was in his mind, he was retired. So he told me that when the job's difficult or a manager gives him a hard time, he just smiles because he's like, I could pack up my stuff and leave. I don't need you guys at all. And that helped him enjoy his job more. So just like that scenario, if you know your number, it gives you something that you go, when I get there, I have a certain peace of mind, a certain comfort. And that's what it did for him.
Yep. Great example there. Second question, what percentage of your net worth is tied up in your business? And before you can answer that question, you have to answer realistically, what is the value of my business? Because I need to understand the value of my business to then define it as a percentage of my net worth. The idea being here that if a disproportionate amount of your net worth is tied up in the value of your business, you may want to explore taking chips off the table and doing a hybrid harvesting strategy, because you're overly leveraged on trying to have that liquidity event, which just means you're taking on more risk.
Yeah, it's funny that as an entrepreneur, I know that it's easy to have overconfidence about your company. And I feel there's no way our company can fail. And I felt that for a long time. But the reality is big companies fail. NVIDIA almost failed a few times in their whole journey. So to think that our company has no risk is not reality. And yet entrepreneurs, they feel because they have control, because they built the company, they think their company is invincible, and then they get so concentrated. It's funny that some of those entrepreneurs also say they don't trust the stock market. I don't trust the stock market, and yet they've got 100% of their net worth in their own little teeny company. And I mean, a company that's doing $1 billion a year is a small company in this country, and all of our entrepreneurs are doing a lot less than that. So keeping that in mind, that yes, your business, you have control and you're confident in your business, but make sure that you're also realizing that there's risk to be concentrated that way in your business.
Yep. All right. Third question. What's the honest assessment of an exit probability? Like we talked about, there's statistic after statistic that even if you want to go to market, most businesses that go to market don't sell. And so it's just the harsh reality that most businesses, especially if we're talking about 5 million businesses being created a year, goes back to that statistic, that 0.02% transact per year. So
I think it's good to get an outside opinion on that too, and not another entrepreneur friend of yours, because every entrepreneur thinks their business is sellable and worth a ton of money. And whether that's an M&A expert that or a valuation specialist or something, get an idea from someone outside, like, is this company worth anything? How much do you think it's worth? Would it sell? And if not, what could I do to make it more appealing or more sellable?
Yep. All right. Fourth question. What's the time horizon? Because as we talked about, there's some tax strategies around 1202 stock and QSBS that if your time horizon to sell is 5 years, or maybe you're thinking, hey, I have 5 years left, maybe you want to pivot your strategy from harvesting to going all in on a sale before you run out of steam, or vice versa, right? Maybe you were all reinvesting and you're like, oh, okay, I don't know if the probability of me selling is as high as I thought it was. Maybe I'll pivot. Maybe I'll do a restructuring to figure out if there's more optimal ways to find a better middle ground. So I think time horizon, and again, being intentional on mapping out what your life looks like and what you want it to look like is very important here.
Yeah, definitely. I know in our situation, I never imagined an exit, for most of the 27 years. And it was about 13 years ago that someone at a private bank called me up and wanted to have a serious conversation and said, hey, I like what you guys are doing. We'd be interested in buying your company. And that was the first moment when I thought, maybe this could be something that I would sell. And at the time I thought, well, I have no interest in selling it because we have so much more to do to grow it. But that was the first time I thought, maybe I should be thinking about a potential exit. So, it's good to think about your time horizon, which I never really thought about. And that way you can plan and make smarter decisions.
All right, last question here. What does your family need in terms and regardless of your business outcome? I think this is very important because if we separate the business versus the personal side, if that business completely disappeared, what is the situation? What's the standing with your family and your finances?
Yeah, and this is a moving target. And a lot of times entrepreneurs, they confuse what their family needs and what their family wants. And they almost think, if I can't have my Lamborghini or my Ferrari, my life's over. And that's not reality. So I think it's an important thing to not only have an idea, but also have a reality check. Like, what would I be comfortable with? What matters most? And, taking a vacation with the kids, that matters a lot. How you do it, that matters a lot. But whether you have the coolest toys that you can show off to your friends, that doesn't really matter for your happiness or for anything else. And I've seen entrepreneurs that over time, they keep expanding these numbers to where it becomes almost unsustainable unless they have this enormous exit. And so making sure that they're honest and they're in touch with reality about how can they live their best life. And it's not that you got the coolest car in the parking lot. There's a lot more to it than that. But I see that creep. I don't know if you can relate to that with some of the clients.
Yeah, I 100% agree. And we were talking before we went live here about, like, if you're doing $5 million of EBITDA, let's say after tax, you're pulling in $3 million a year of a pass-through business. You sell at 6x times the 5 million is 30 million, maybe 25 million, 24 million after tax. Okay, well, if that was just all, that's 8 years of runway, based off of what you're spending. That doesn't sound like a whole lot. And so that's where I think you need to, like you said, obviously that money would grow, but when your burn rate and your consumption is so high, you have to get a very big exit multiple in order to create enough wealth to sustain that lifestyle.
Yeah, and that's where I like, if you're going to do stuff with your money that is not not something that you want to be prepared to have a part of your life forever, I'd rather see you do things that are not like locking into long-term payments. Like you buy a house that's too expensive or too big, and then it's hard to go backwards. Or you get in a car payment that you don't really need. If you take a vacation, you spend too much money, you don't have to do that again. But some of these things people get locked into, and then it becomes a status thing where they feel like their personal worth is tied to that car or that house or something like that. And then it becomes problematic if they have to go the other direction. And there's nothing that feels as good as positive cash flow and having more money coming in than you're spending. And if there's a blip in the business, you don't panic and go, maybe everything that I care about, that I want, is going to crumble before my eyes.